The U.S. economy shrank in the 3 months to June. That's the second straight quarter of contraction, which meets the technical definition of recession. Growth fell by 0.9%, with a plunge in investment accounting for much of the decline. The news came less than the day after America's central bank lifted borrowing rates by 0.75 of a percentage point, its latest effort to battle raging inflation. Well, Arise business correspondent Laurie joins me now from London to discuss that story and the rest of the day's business headlines. Good to see you, as always, Laurie. So the U.S. economy is shrinking for the second quarter in a row. Does it now seem inevitable that a recession will follow leading up to the key midterm elections?
You're absolutely right that the timing of this is very, very unlucky for Joe Biden. By the conventional definition of recession, that is two consecutive quarters of contraction. Yes, it would mean that the U.S. is in a recession. As for the U.S., though, they tend to look at recession a little bit differently than that conventional definition. There's an institution called the National Bureau of Economic Research, the NBER, and they looked at a whole range of things, not just economic output. They look at things like household income, retail sales, employment. And employment has held up very, very well during this slowdown in growth. They look at all of these factors and then quite a time after the fact determine whether the U.S. has in fact been in a recession. So we won't know whether the powers that be pronounce this to be a recession for a couple of months yet. But that said, 2 consecutive quarters of growth does not look good by any standard. If it's not a recession, if it's not deemed to be a recession, it certainly is a pretty dramatic slowdown.
Well, you're certainly right about that. And that raises the question, what is the cause or the causes of this contraction?
And it's worth looking under the hood of this because there are a couple of statistical anomalies here. But the biggest drag on growth, Charles, was a massive fall in investment, particularly real estate investment, construction investment. That accounted for 2.73 percentage points of growth off of GDP. So if you had added that back in, if you had taken investment off of this, GDP actually would have expanded. And the reason for this, Charles, is no surprise. It's because of higher interest rates. These sorts of construction projects that we see, house building, tend to be financed by credit. Credit is a lot harder to come by with higher interest rates. So that's why we've seen such a plunge in investment. It's not surprising we've seen a downturn, although the magnitude of the downturn surprised me a little bit. Got to keep in mind here, though, Charles, that these are second quarter figures, and we didn't see that much of an increase in interest rates over the second quarter. We saw a very small rise in the month of May, a bigger rise toward the latter part of June, but that bigger rise toward the latter part of June in interest rates will have more of an effect in the third quarter than it would have in the second quarter. So that suggests that investment could be very weak again in the third quarter. Something else that was troubling is a big downturn in spending on goods, consumer buying of goods. That was down more than 4%. That was balanced a bit by a rise in spending on services. The reason for that isn't entirely clear. Did people stock up on all of the goods they need in that pandemic time, and now they're shifting their spending to services? That would be rather healthy for the economy. Or is this spending on services that people think are somewhat non-discretionary, things like medical care, things that they cannot scrimp on? That would be more of a downturn going forward.
And Laurie, I want to talk about the Federal Reserve raising interest rates in a minute. But first, President Biden's multi-billion-dollar green energy package now seems likely to pass. And that package is going to be funded by raising taxes, isn't it? Which is thought will probably help America's inflation problem.
Absolutely. And look, Charles, my jaw is still on the floor that we have had some degree of agreement between Chuck Schumer, the lead Democratic in the Senate, and Joe Manchin, who has been somewhat of a thorn in the side of the Democratic administration. I'm shocked that they came to some agreement. And you're right. The way that this will be financed is by creating, to a certain extent, raising corporate taxes. But it's not raising the corporate tax rate per se. It's States instituting a minimum tax of 15% across the board for all corporations. Now, the official tax rate in the U.S. for corporates is 21%, but with various loopholes and deductions on debt payments, that sort of thing, about a third of the 100 biggest companies in the U.S. pay underneath that 15%. So that minimum tax could affect, people are still going through the back of the envelope on this, but the feeling is about a third of the country's biggest companies could be caught by this and having to pay more taxes. So it's a way that could raise taxes without necessarily dampening investment. I don't see anything fiscally or monetarily wrong with raising revenues in this way. However, I do think that the revenues raised may be a lot less than what the administration is hoping to raise.
And of course, just a hot second ago, Laurie, we were talking about the Federal Reserve raising interest rates by a big amount for the second month in a row. And that suggests that inflation is proving to be very difficult to subdue, doesn't it?
Absolutely, heading toward 9% in the U.S., 9% in other countries. And for the Federal Reserve to be implementing these massive interest rate hikes as the U.S. may well be in a recession, it's not a great look. Now, I can tell you that the Federal Reserve will not have had any sort of advance notice of these weak GDP numbers when they voted to raise rates yesterday. They would have had a call sometime late last night after announcing the rate announcement, a bit of a tip off from the Bureau of Economic Analysis that releases the GDP figures to say these are going to be weak numbers, but they will not have known the extent of the weakness when they decided on that rate hike. Jerome Powell, the head of the Federal Reserve, spoke to the press yesterday, and it's interesting because the markets seem to take his speech as a sort of a reassurance that perhaps these high rates of these big rate hikes may be coming to an end. I listened to the same press conference and didn't think that at all. My feeling was that Jerome Powell and the Fed have made a commitment to fighting inflation, as you said, regardless of the toll that may take on the U.S. economy. And it feels very much like the Federal Reserve is saying, if we have to engineer a recession to get rid of inflation, well, that is what we're going to have to do. I think the Fed has a degree of confidence in the fact that unemployment has remained very, very low during this slowdown. Unemployment's still well below 4%. And I wonder if the Fed will be quite so brave if we start to see those jobless numbers creep up. We'll get a new gauge of joblessness a week from tomorrow.
And Laurie, the US isn't the only nation struggling to find growth. Some interesting news out of China today.
Absolutely. This is, I think, with the shocking U.S. numbers, this story was a little bit overlooked today, but we got a statement from the economic division of the Politburo. That's China's big, sort of attempt at a legislative body. And they have talked about keeping growth in 2022 within a range. That's a translation of a direct quote. Now, previously, the Chinese authorities have spoken about a goal of an economic growth goal of 5.5% this year. They have abandoned that. And that makes a great deal of sense. The Chinese economy grew, depending on how you measure it, it may have actually contracted in the second quarter. So that 5.5% goal was a bit of a pipe dream. But the fact that the Chinese authorities have abandoned that really is rather noteworthy. And that 5.5% goal would have been the slowest annual growth rate for China in a quarter of a century.
Laurie, I'm always amazed at how you range with such ease across so many different business stories. But then that's why you're the business correspondent and I'm not. Laurie Laird talking to me there from London.